A special thank you to each of our subscribers who make this channel possible. Here's today's story. In a significant address on Tuesday, U.S. Treasury Secretary Scott Bessent shed light on the ongoing tariffs conflict between the United States and China, suggesting that the current state of affairs is unsustainable. Bessent's remarks come at a time when tensions between the two largest economies in the world have reached a boiling point, with both nations imposing hefty tariffs on each other's goods. The backdrop of this trade war has led to a ripple effect in financial markets, raising concerns over economic growth and inflation. Bessent, speaking at a private event for J.P. Morgan Chase in Washington, emphasized that while he anticipates a de-escalation in the trade war, formal negotiations between the U.S. and China have yet to commence. This acknowledgement underscores the complexities involved in resolving the disputes that have arisen from the tariffs implemented by the Trump administration. The Trump administration has enacted a staggering 145% import tax on Chinese goods, prompting China to retaliate with its own 125% tariffs on American products. These tit-for-tat measures have not only strained bilateral relations but have also created uncertainty in global markets. Investors are increasingly worried about the implications of prolonged tariffs, leading to a downturn in the stock market and rising interest rates on U.S. debt. Bessent remarked, "I do say China is going to be a slog in terms of the negotiations, indicating the challenging road ahead." He pointed out that neither side believes the current situation can continue indefinitely. This sentiment reflects a growing recognition that a resolution must be reached to prevent further economic fallout. The S&P 500 stock index saw a rise following the news of Bessent's comments, indicating a glimmer of hope among investors that a thaw in relations could be on the horizon. However, the Trump administration's approach has not shown signs of a significant shift. The president has maintained a firm stance on tariffs, insisting on the need for other nations to reduce their import taxes and eliminate non-tariff barriers that the U.S. claims hinder its exports. In addition to China, the Trump administration has engaged in discussions with several other countries, including Japan, India, South Korea, and members of the European Union, Canada, and Mexico. These negotiations are part of a broader strategy to address trade imbalances and promote fair trade practices. Yet, the focus on China remains paramount, as it is the largest trading partner of the United States. As the trade war continues, the implications for American consumers and businesses are becoming increasingly apparent. The tariffs have led to higher prices for a variety of goods, from electronics to agricultural products. Farmers in the U.S. have particularly felt the brunt of the tariffs, as they rely heavily on exports to China. Many have reported losses and are calling for a resolution to the trade dispute. The uncertainty surrounding the trade negotiations has also impacted the stock market, with fluctuations reflecting investor sentiment on the potential for a breakthrough. Analysts are closely monitoring the situation, as any signs of progress could lead to a rally in stocks, while setbacks could result in further declines. In conclusion, while Bessent's comments suggest a possible easing of tensions between the U.S. and China, the path to resolution remains fraught with challenges. Both sides must navigate a complex web of economic interests and political pressures to reach a compromise that will benefit their respective economies. As the world watches closely, the outcome of these negotiations will undoubtedly shape the future of international trade and economic relations for years to come. That's all for this story. We upload videos every day covering many different subjects, so hit that subscribe button to stay informed. Thanks for watching.